Welcome, guys. This is TFX Trading Floor. It is STF, and this is your guy TFX. And you know very well, as I promised, that we'll have a YouTube video on VIX indices. This is the one that I did promise, and actually we'll go through on what are Deriv.com VIX indices, because many guys have been asking me on what there have been so many queries. Guys don't understand well what we mean by trading synthetic indices. You know very well, just go to www.deriv.com. This is their website. This is where you log in if you have an account. If you don't have an account, what you can do is just register, then come here and choose deriv.mt5.com. And this is where you start on this journey of trading synthetic indices. And then after you register everything, just go to their platform and download the MT5. When you download the MT5, this is what you get. You get deriv.com. And don't forget, they have a new server, which is Deriv Holdings Gwense Limited. So this is their website, and these are the trading assets that they are quite a number nowadays, not as they were, but we need to go to the actual basics and see what we mean by VIX indices, and that's why I had to come up with just a simple guide here, and this is just on what are volatility indices. And of course, from the word volatility, you know that volatilities simply measures the frequency and magnitude of price movement. As the price move up and down, this one can be able to measure or how traders are feeling or their sentiment towards a certain indices. This is what we mean by volatility indices. And actually, one of the key indices that we have is what we call the BOE index, which is whereby Chicago Board of Options and Exchanges, they did come with it. And as we mean by the word index as well, before we deal with the volatility, when it measures the magnitude of price movement, the next word is the index. What we mean by the index, remember, index is simply an asset whereby that measures the underlying price of assets. And one of the greatest example is something like S&P 500 that measures most of the US stock market. If S&P 500 that will include the underlying of most of the majority of the New York Securities Exchange or the US stock market, be able to tell the ascent whether they are moving up or down. And this one, that's why the Chicago Board of Options and Exchanges did come with one of the indexes that they use, which is called the CBOE VIX indices, that measures these indices that you find. And of course, this one would measure whether the sentiment of price, when it is spiking down, that tells you there's a very big panic on the market. What happens? The stocks will go down. So it goes on opposite direction. Like when it's moving up here, most of the stocks are moving in the opposite direction. So when it's moving up, and especially it goes to around price 28 or an average price of 28 to 30, there tells you there's a very big panic in the market, and most of the investors are liquidating their stocks. And this is the case of you find with most of these indices. So with this CBOE volatility index, and that's how it works. And most you find it on TradingView, investing.com, and you can also find it even on other trading platforms like from Pepperstone. You can also find it in XNS Broker. You find this CBOE VIX index, and you can actually trade it. But the best thing you can do is it helps you to measure or to help you in your trading, especially when you are dealing with correlation studies. That is its work. Apart from that, the next key thing you can do from that, there are some calculations whereby the VIX indices will be measured by how many puts and calls, what we mean by buys and sells of a specific trading asset, especially for S&P 500. Thus will give us the actual price of the market. That is what basically we mean by VIX or volatility indices, especially the one main example is CBOE VIX indices. That's what we mean by the word volatility. So whether it can is spiking up or down, then we'll measure whether how the traders' sentiment or how the traders are feeling, and so that they can be able to approach the market according even on currencies. But the topic of the day is not there. Hence the word, then we go to what I've just introduced first, what we mean by the word Deriv, volatility indices, or what we mean by the synthetic indices. So from Deriv, this is just the name of the company, as I've explained. If you check from their website, you can check this at deriv.com. That's just their website. These are their trading platforms. We need to see what are these assets. So synthetic indices or VIX indices, you can call them whichever name you want, but of course, this simply means it's simply a class of simulated markets and contain volatility indices. And not only volatility indices in this case, it is a broader class of simulated market. The word simulated simply means that they are not actual price movement. Kind of, they are just a program that is run that actually releases these numbers based on the structural trend of the market. And of course, what it does is it mimics the price action. So these prices must move in the direction or according to how the price action behaves. And you can check this one of it, like this boom 300. Even if I put any other currency here, you'll find that the structural trend of the market is intact if the price continues making new lows to maintain the integrity of the trend. So you'll find that a downtrend, you'll find a raging market, and of course, you'll find an uptrend. In such a case, like you can check on this market, here it was making new highs, forming higher highs, higher lows, higher highs. There's market transitions from an uptrend to a downtrend, and of course, they are raging market. So this is how these programs are. Hence the word synthetic. Hence the word synthetic. That is key. And these one are grouped into several types, and of course, these groups are 8. One is volatility indices, which are 10, 50, 75, 100, 10 1S, 25 1S, 50 1S, 75 1S, and 100 1S, 150 1S. And all these ones you can 200 1S, 250 1S, 300 1S. And of course, all these you can find them on the trading platform. Then you have crash and boom indices, and they are 6 from 300, crash 300, 500, 1,000. Then you have boom 300, 500, and 1,000. Under step indices, we have step index as one trading asset. On the jump indices, we have jump 10, 25, 50, 75, and 100. Then you have rage break indices, which are 2 RB 100 and 200. And actually today, that's why we are selling RB 200. These were just one of the trading assets. You can find it here. It's here. This is one of the trading assets. To be able to find them on the MT4, let's just go through them. Then you have what we call DX indices or DX indices. You have DX 900 up and DX 900 down. Then you have derived indices and basket indices. These are all the classes. So when you come to the MT4, those are the assets that when you come here, you come to trading platforms, or when you come under symbols. When you come to symbols, you'll find all these classes I'm talking about. If it is VIX indices, you'll find here you have VIX 10, you have VIX 10, 25, 50, 75, and 100. All these you can find them here. So they are just like currencies, you just add them. Then crash and boom indices, you'll find it here. These are the ones that I've talked about. Then you have step index, it's here. Rage break, just add them and you can find them, they are here. And the good thing is today is on a Saturday and you can see the market is still on. Then we have the jump indices, DX indices, DX 900 up and down. Then the basket indices and derived indices. Why don't we trade by basket and derived indices? This one mimics the actual currencies, as you can see how they are at this point. If it is like Euro USD FX10 and the other one, they mix these indices. And that is why, like you can check like in today, you can check there here. These are DX 910. What actually happens from here to this point? On Saturday, because there is no currencies that is open, I find them they are kind of stagnant, they don't move. So what do I do in such a case? That's why I tend to ignore them, because if you're trading like currencies on weekdays, if you buy their wood, then this one will most cases also be following their wood. So the best thing is I concentrate from DX 900 down, DX jump, step, rage break, crash and boom, and VIX indices. These are the best and the most volatile in my case. So at least now you know where you can get them. And from them, at least this is just what I've just showed you in on this PDF. So it's just another key thing you need to notice is the advantages, their merits and demerits. You need to know why do you think why you think this VIX indices is good. One of the key one is that they are not affected by fundamentals, like what has been happening nowadays with, like yesterday we had the non-farm payrolls, the CPI rate decisions. Nowadays, including the CPIs and PMIs, actually the market is very volatile. That means this one will not be affected by anything. The program is just running up, just running, releasing these numbers. So that tells you are just trading. You just need or what we just need is, if you're a good technical trader, the money is for you. Another thing is you can trade this one 24/7, 365 days all around the year. Yeah, you can trade them including Saturdays, Sundays, and holidays and all other time. So if you've got time, it can be a good time when you are relaxing to just make some few moves here and there. Their spread, of course, is low. There are differences between buy and sell. In fact, they have the lowest. The lowest. Most of the time you find is just 1 and 0 pip. So there's no one with absurd spreads. Like what you find is some brokerage firms, especially the market makers, and that have one of the worst regulations. This one is quite good because of the spread are good and they are not affected by anything. Another case you find in these indices is that they can be traded with price action. And I think I've been able to portray this, that actually this market is following the structural trend and the candlestick patterns. This one is one of my favorite trading principle, and is the one that I use when I'm trading. That means they favor my trading, and the X price action is one of the best trading and one of the most profitable strategies that you can use in the market. Yeah, that is it. Then they have some few disadvantages, and one of the key thing, because any demerit or any shortcoming of anything, you need to have to come up with a solution. And one of the worst one is they have varying lot sizes, or lot sizes are different. So this is one of the worst one you can find, because as compared with currencies, what you find in these ones, not all these synthetics or these VIX indices start with 0.01 volume. And this one has been, when it comes to risk management, you need to know what are their minimum volumes. And that's why I've tabulated all their minimum volumes. Like you can check with the VIX 10 index. If it was like in currencies, everything start from 0.01. This one start from, like you can check like VIX 10 from 0.3, 0.25. These are minimum volumes. But all in all, their minimum volumes means it's their starting point of 0.01. At 0.01, you can check like VIX 75 index is at 0.01. So these are the volumes you need to be keen, so that you don't start, like if you come to VIX 75 and start with 0.01, that is 10 times its minimum volume. That tells you it can affect you in a big way. So you need to keep on checking their minimum volumes. That is key. You can check at the 75 index. The column is here. Although trading assets have changed, what I've actually done, I keep on updating. Like this one I've just updated this morning. Boom and crash indices, these are their minimum volumes. Take care. Keep checking. You can check like this one is like one standard volume on currencies, but actually it's just the normal 0.01. So keep and know which one to start from, 0.01, 0.2. So they keep on varying. This late break, at least they at the start, like just like currencies at 0.01. Step index to start from 0.1. Jump index, again they start from 0.01. This one is a good. And then DX 900 up and DX 900 down, they start from 0.01. This one you don't have to worry, I know about that. And if you come to this point, how can you check that? You just come on the currency, like you want is like 10-1s, you just like click here, you come here where it's written specification, and you can be able to come here down and check the minimum volume here is 0.2. If it's something like crash 300, you just come here, right click, come to specification, come down to 0 to minimum volume 0.5. That is how you check. If it is VX 75, like VX 25, come to specification, you check, you find it is minimum volume 0.5. That's how you check the minimum volumes of these indices. So that is how you do it. Then the key thing is just go to their website, or and having that is the biggest one. So after solving that one, you are done and you can start trading. Then from there, the next key thing you need to notice is how do you start. From this PDF, it is available on the file section on my Telegram group, which is TFX Trading for here. If you come to the file section, this is the PDF. You can download it here for free. Then from there, what you can actually do is just take the link here. You can copy this link on your browser, come to the website as I've indicated, register for an account. Then when you register for an account, just make sure, as I had indicated earlier, you choose either real demo account, then you choose Deriv, Deriv.com MT5, and this is their server, Deriv Holdings Limited. You'll be able to log in there and open a trading account, and actually you start trading. So make sure you choose Deriv MT5 Trader, Deriv.com MT5 from the website, and that's how you start trading. So I think with that, you will not have any other problem trading, because from under the Traders Hub section, you go to the Traders Hub section and choose either real or demo here, as I've explained. Then choose derived MT5. Under derived MT5 is where you open an account. This is the account you choose, because this is the one that have these synthetic indices. You'll find these synthetic indices, and with that you start trading. So from TFX Trading Floor, that is what I wanted to have, just an overview for everyone who's having a problem with these indices, and you'll be able to trade just smoothly these indices without any problem. So with that, that is it. Just make sure you learn as you earn with TFX Trading Floor. Thank you.